Hello and welcome to a special budget edition of Simply inTAXicating. As promised in our last episode on direct taxes, we talked about very soon we are going to come up with very detailed focus episode on indirect taxes. As explained in the last episode, for Mr Jaitley, it appears that for garnering revenue, he has relied more on the indirect taxes. We examined the figures, the budget estimates, the revenue projections for the fiscal 2014 and 15. It was found that from direct taxes, Mr Jaitley is looking forward to gather about 85,000 crore. So far as indirect taxes are concerned, it is little more than 1 lakh crore. It clearly indicates that Mr Jaitley has relied more on indirect taxes to gather revenue and meet his, or probably to breeze the fiscal deficit which has been staring in his face. And of course, Mr Jaitley has also gone for amendment in the FRBM Act. Indirect tax side, apart from hiking the excise duty rate from 12 to 12.5 and also service tax rate to 14%, there is little confusion about the Swachh Bharat says whether it's going to be 2%, although if you go by finance bill, it's very clear it's going to be 2%, but a few clarifications coming from very senior officials from the Ministry of Finance given to different medias and at different forum, it appears that the government is, just sort of, having or has acquired the enabling provisions, and it may take a call. It can be less than 2% as per, the statement of Mr. Revenue Secretary, Mr. Shaktikanta Das, which was reported by some newspaper today. So, looking at all these aspects, so today we are not going to focus too much on the tax rate. We are going to touch upon the substantive changes in the tariff, in the act, in the rules, in the procedures. This budget has made a lot of interesting changes to clear the cobweb of a lot of procedural issues, etc., etc. At the same time, the rules. A lot of rules which are going to be in favor of course, the assessees, the rules which have been amended. With respect to education cess, of course, a tricky situation appears to be emerging where the assessees have a lot of education cess, balanced education cess in their credit account. To know all this, to go deeper into the various legislative changes proposed in direct taxes, let us go to TIOL Tube's Hyderabad office, where TIOL Editor-in-Chief Mr Vijay Kumar is going to talk about all those legislative amendments proposed, its implication, and also the rationalization, the restructuring of the penalty architecture which is there in service tax, Central Excise. So, a lot of interesting provisions, and a couple of distinguished domain experts are also going to join him there at our Hyderabad office and talk about and also give their reactions to Mr Jaitley's budget proposals. So, let's go to Hyderabad, over to Mr Vijay Kumar.
What a budget! Welcome to this special budget edition of Simply inTAXicating. It is said that what the budget reveals is interesting, but what it conceals is downright fascinating. Let's look at the Central Excise Act. In section 11A, they propose to define the relevant date for recovery of interest. Well, under 11A, the duty is recovered and there is a huge procedure for recovering the duty, including the relevant date for issue of notice. Now, over the years, the department seems to be more interested in interest and penalty than the duty itself. So, some time back, a provision has been inserted into the Act to prescribe a procedure for recovery of interest. This is the same procedure as for recovery of duty. But unfortunately, the relevant date for issue of a notice for recovery of interest was not prescribed by law. They have solved this problem now. A relevant date for recovery of interest has also been prescribed. Well, it may be good for the assessees too, because there used to be an opinion in the department that there is no time limit for recovery of interest. Perhaps this fixes a time limit. Let's hope it does. I have with me today a very distinguished consultant who has the unique distinction of having imposed penalty as an adjudicating authority, defended penalty imposed by commissioners and others in the SESTAT, and is now vigorously contesting penalty as a consultant. In this budget, the government says it has tried to rationalize the penal provisions. Let's find out from Radha Arun, a former IRS officer, as to what this rationalization is all about. Maybe I should start with asking her, or maybe that should be the thing that we end this with. Should an assessee pay the penalty before the show cause notice, after the show cause notice, but before adjudication, after adjudication, or try his luck right up to the Supreme Court? Welcome, Radha.
Yeah, thanks, Vijay. You've started by asking me for a legal opinion, right? Now,
I'm not going to pay you for that.
In fact, till now, I was advising the assessee in service tax not to pay the dues with 25% penalty as pressurized by the audit groups, because the penal provisions were such that the penalty was capped at 25% up to 30 days after the receipt of the adjudication order. Therefore, the assessee had no incentive really to pay that penalty before issue of notice. Now, part of the rationalization is that this has been changed. Now there is a clear incentivization for early payment of disputed dues with interest, along with penalty in evasion cases. There is also a clear distinction now between the treatment of evasion cases and non-evasion cases. Earlier in service tax, section 76 covered non-evasion cases, and the penalty was capped at 50% even for those. Capped meaning that was the maximum penalty, and if the assessee fell within those parameters in terms of value, age of demand, etc., the adjudicating authority had no option but to levy that penalty. It was mandatory. But in evasion cases also, there was a cap of 50% if those details of the transactions were available in the records of the assessee. This was highly irrational. This particular clause of 50% cap for evasion cases where details are available in records has been thankfully deleted. Now all evasion cases are treated at par. However, the rights of those offenders whose offence pertains to the period before the amendment to have this cap of 50% has been protected by section 78B. Other than that, I find it very welcome provision that in customs, excise and service tax, the penalty for non-evasion cases is capped at 10%, the maximum penalty. There is across the board, there is a part of the overall push for compliance which we see now is there is incentivization of early payment of dues even after issue of show cause notice. In non-evasion cases, if the dues are paid with interest, there is no penalty up to 30 days of the show cause notice. So this threat that used to be held out to the assessee that you pay up, otherwise we will issue show cause notice, because when the show cause notice is issued, immediately it gets issued as an evasion case, we all know it, and immediately the penalty goes up to a minimum of 25%. So, these pressures will not be there. An assessee can consider the matter, decide what are his chances, pay his dues with interest up to 30 days of even issue of notice. He has the advantage then of seeing what is the case of the department. He can see the notice and see what is the case of the department, where do I stand, maybe pay up, maybe wait till the notice is adjudicated. Even after adjudication, he has the option of paying all the dues with interest and 25% of the penalty. Now, we must remember that if it is a non-evasion case, the penalty is capped at 10%. So, this 25% is 25% of 10%, and it is a definite incentive for compliance. I think these are welcome provisions insofar as rationalization are concerned.
This is the first time I am hearing somebody saying penal provisions are welcome.
We cannot wish away the penalty and taxes. As you said right at the outset, what is a tax without penalty? And if you violate a law, then there will be a penalty. But my slight concern remains about these amendments on two counts. And both these things read together, in fact. One is that section 80, which provided for no penalty at all in cases of reasonable cause for non-payment, has been done away with. You might say that now all these incentives having been given for early payment and no penalty, you don't need section 80. However, there is another thing that has been done away with, that is, there was an extended period up to 90 days for the small service provider to make these payments and avail of the benefits of the no penalty or lower penalty. This has been done away with. I feel that the small service provider still needs that safety net, and either section 80 should be there for him or this extended period should be available for him. With this caveat, all in all, I welcome these restructured penalty provisions.
But don't you think penalty should be at the discretion of the officer imposing penalty? Should it be mandatory?
In practice, I think you will, if you give discretion to an officer, the tendency would be to impose a higher penalty rather than a lower penalty.
So anyway, you end up paying the same thing.
So you are probably paying a lower thing here than you would have had you left it, because as you said at the outset, the revenue officer, now having sat in that seat as you pointed out, I know the constraints of the person adjudicating. He is under heavy pressure to say why he is not being more harsh to the assessee than he is already been being. So it is good to give him that give the officer also that safety net of a mandatory cap.
So do you think these penal provisions have been really rationalized, or do you think something more has to be done on that?
I'm sure nothing is perfect, and if one applies one's mind, one can make suggestions for refinement, but they are good.
Thank you, Radha. It was nice talking to you.
Thank you.
Especially to know that you welcome the rationalized penal provisions. Thank you very much. The Central Excise Tariff. The duty of Central Excise has been enhanced to 12.5% and no education cess. One complication regarding education cess, higher education cess, and calculation of that duty of 12.36, all those complications are gone, but the duty has also slightly gone up. But this creates a small problem in the sense, what happens to the credit of education cess that I already have with me? Now, the credit of education cess can be used only for payment of education cess. Now, I must be having some credit with me, or I may get some credit on the goods that I receive today and after. Well, the board has to clarify as to what happens to this credit, and until then you keep the credit and hope for the best. summer is here. And before you try to grab that fizz, remember, aerated waters have become slightly more expensive. The duty has been enhanced from 12% to 18%. Well, if you want to beat the heat, let the finance minister also have a small share in it. And no budget is full, complete, without a hike in excise duty on the smokers. Well, smokers are perhaps the largest taxpayers in the country. So cigarettes, tobacco products are all going to be more expensive.
So cigarette and tobacco products continue to be the favorite punching bag for Mr. Jaitley, like his predecessors in the past. This brings us to the most vital issue of a retro amendment. Retrospective amendment has earned a lot of bad name in the last few years. Particularly with respect to amendment proposed to Section 9 of the Income Tax Act. This time also, there are few instances of retrospective amendments, but certainly not in favor of revenue. This time, it has been done by Mr. Jaitley to favor the assessee. We will get to know more about it, and let's take a break. After the break, we will go straight to TIOL Tube's Hyderabad office and talk about the retro amendments with Mr. Vijay Kumar. Welcome back. Let us go straight to Hyderabad and to Mr. Vijay Kumar, who is going to talk about all those retro amendments which have been done by the budget makers in order to favor the assessees. So amendments in the rules, etc., proposed are actually positive amendments. So it's a case of positive retro amendments. Over to Mr. Vijay Kumar.
Retrospective exemption. The last few years, budgets were notorious for the retrospective amendment to the law. We all remember the Vodafone retrospective amendment and the heated debates it caused, not only in India, but around the world. Anyway, the finance minister, Mr. Jaitley, has promised that as a policy, he will not impose a retrospective tax. It's a welcome thing that in this budget, there is a retrospective law, but in favor of the assessee, for the assessee. In the manufacture of a rail track, there was a confusion that the value of rails is also added. This was exempted by a notification in 2012, but a prospective exemption, and several small assessees were stuck with huge demands running into crores for doing small job work for the railways. Now the finance minister has taken them out of the misery by allowing the exemption with retrospective effect. What is the reaction of the pharma sector to Mr. Jaitley's budget? I have with me Mr. Suryanarayan, Director in Dr. Reddy's Laboratories, the largest pharma manufacturer in the country. Mr. Suryanarayan, let's have your response to the budget.
Thank you, Mr. Vijay Kumar Garu. As you asked about my response to the budget, first and foremost thing, the budget is having a mixed response. It is not either so good or so bad. It is via. And as far as pharma sector is concerned, I just mentioned 2-3 points. First and foremost thing, what we were happy is abolition of that education chess related things, and increasing to 0.5%. That's not going to make much difference, because in the software package what we are using, SAP, maintaining 3 different heads, invoice anything, and invoice setting up and all these things was becoming a problem for us. Now we come out of that problem. So simply 12.5% will pay, and invoice package software amendments are being done. That is one point.
What do you think is going to happen to the credits?
Credit, we are expecting that maybe within a very short period they will be issuing a clarification that all the accumulated amount lying in the education chest, that account, would be merged with the SANVAT account.
Do you think they can solve this problem by a clarification? Don't you think there is requirement of a change in the rules?
Maybe while giving clarification, they might also make an amendment in the rules. That's what we are expecting. Sir.
Thank you, sir. Continue.
Yeah. That is one point. Second point, which is welcoming point, was the increase of time limit for taking SANVAT credit from 6 months to 1 year is a welcome fact, because though earlier courts and CSTAT has given reasonable time would be 1 year, in 90s they have put the same restriction. They have again withdrawn. Again last year they put this. Again it is withdrawn, and somehow stick on to 1 year period. It's a welcome factor.
Did you lose any credit because of the 6 months?
Yes. In terms of service tax receipts, we had foregone a little amount, not a considerable one, because the payment was linked to credit. So where we were unable to, maybe because of the credit terms as per the service order and all these things, that all make major impact, significant impact. It plays a significant role, that credit terms making a way where we cannot pay the amount, though we are able to pay the making the payment. So thereby we lost not very significant amount, but yes, we have lost some money.
But do you think there should be no limit at all?
Yes, because when we are eligible to take SANVAT credit under Rule 3 of SANVAT credit rules, the restriction, condition for availing SANVAT credit only is supposed to be prescribed in Rule 4. But this condition is something looks arbitrary. What I felt was, it is not supposed to be there, because obviously I paid the money when I purchased the material.
And if you don't take the credit, you lose.
You lose, because I have the right to take credit.
Fine. But anyway, you are happy with 1 year.
Yeah. Happy with 1 year, but we are also fine tuning the import related documents. Bill of entry, sometimes what happened, though they have cleared the material, by the time the bill of entry comes after getting assessment stamp from customs and all through our CHA to the factory, or first it will come to office and then it has to be sent to factory, then obviously sometimes in 1 or 2 cases, in a few cases it may take some time. But I am confident that we are fine tuning that aspect also to safeguard.
Yes, sir. But I find a lot of disappointment in your face.
Yeah.
What way are you disappointed with the FM? What did you expect and what did he not give you?
As far as the final product duty rate is concerned, we are not so happy in respect of Chapter 30 products formulations. All along we are expecting to correct the inverted duty structure, because we are paying 12% on inputs, raw materials and other things, but whereas we are paying only 6% on our final product. So, and also we are paying SAD. It all resulted in accumulation, despite our paying 6% duty on our exports, which is contributing 80% of our total production, because we are FDA approved facilities. We have registered our products all over the globe, across the globe, and we had very few, considerably high number of products got FDA approved, and a special approval of exclusive marketing right for 180 days in US market and all these things. Though we export large volumes of products, but our payment is restricted only to 6%. Even after doing all these things, at any given point in time, my accumulated credit would be anywhere between 150 to 170 crores.
150 crores of
that accumulation.
Unutilizable credit.
This
is a cost to your company?
Yeah, obviously it's a cost, because I have to show in the books as if it is a SANVAT receivables, but I don't know when we are able to exhaust that. That is why even in newspapers and so many magazines, it was very well highlighted that FM is focusing more on addressing the inverted duty structure. Maybe he addressed in a very few commodities. Unfortunately, it was formulations were not there in that.
So you are not very happy about
Yeah,
it?
no, we are not very happy, sir.
Yes, sir.
So that should have been done, but at least we expect, okay, keeping in view that GST is going to be implemented from 1st April 2016, we thought anyhow he will be bringing some concepts of the VAT, though he has already brought earlier years VAT concepts, some negative list concept and all these things. We thought they would be extending SENVAT facilities seamlessly. So tomorrow everybody is expecting from April 2016 that seamless credit would be extended to in terms of in the GST regime. So thereby, even if they keep the GST rates higher, maybe 26 to 27, that is the latest buzz. Earlier it was 22%. So people are feeling if they extend seamless facility, the rate would be higher. If they continue the same restricted facility like what the present SENVAT is there, obviously the rate would be 22%.
So you are very apprehensive that you are going to carry this useless credit into the GST regime also?
Also. And I don't know, we are not very clear about this because it's in the air, whether they are going to keep their promise to provide the annual refund facility, or whether they consider this carry forward facility or not, we don't know. It's not very sure. So initially, even if GST comes also, our cash outflow would be very, very high for initial 3-4 months, because it's having a rough calculation. What we made was around 590 crores or so. So maybe on purchases, on even finished product also. So these are all, so many question marks are there. But as far as SENVAT credit is there, it was not done. Even SAD exemption, though he has very clearly made in the para 112 of the speech, just now I have seen, it was only limited to some IT related product items, but unfortunately it has not done.
Maybe that was slightly misleading. The way he pronounced it.
Yes, sir. Yes.
Maybe you all thought that
everybody was under impression. So
exempted.
Yes.
But it is unfortunately your products are not included there. Tell me, are you hopeful that GST will come in 2016?
Yes, sir. I am confident because the way it is going, and the 122nd constitutional bill is really going to maybe get through this in this session, and after that the states, they might have calculated the timelines and all these things. I am very confident because even in yesterday's budget also FM very clearly indicated that GST is being implemented from 1st April 2016. So industry is waiting for that eagerly.
Thank you very much, sir.
Thank you, Mr. Suryanarayan, for sharing your optimism. Your optimism is actually shared by a large number of assessees in the country. The Government of India, the Union, the Centre and the states, both of them, all stakeholders will certainly meet the deadline of 1st April 2016. Hopefully, the GST is also may prove to be the panacea for all credit related thorns which the industry appears to be facing today. GST proposals, of course, Mr. Jaitley has been trying to align a lot of other proposals. Let us go to CBEC former chairman, Mr. Sumit Majumdar, for his reactions, for his optimism, for his comments on this issue.
On the GST front, what he has done, that by now, as I had mentioned in another context, the broad principles of GST are getting crystallized, and there will be the state GST and the central GST, two components, and that in the GST regime, the number of exemptions should be less, and the taxes rate on the goods and services would be the same. There may be 2 rates or 3 rates, but that will be common for both service and goods and for center and states. So keeping that in mind, I find a very important change has been made in this budget is that the negative list of the services for the purpose of service tax has been pruned quite a bit. And this is found mentioned even in Finance Minister's budget speech. Generally, Finance Minister mentions only the important aspects in his speech. The rest comes in the fine print. It has been pruned quite a bit. And then I find that a lot of exemptions, number of exemptions have also been reduced. So in the GST regime, these number of exemptions would have to be minimum. And to that end, already the center and the state officials are working. So there is one clear indication that he is going towards the GST end.
Thank you, sir, Mr. Majumdar. Let me also thank Mr. Suryanarayan and Madam Radha Arun for their wonderful insight and articulating very lucidly in a very simple language the complex, the intricacies and the penalty architecture integrated into various tax laws, particularly indirect tax laws. Of course, TIOL netizens, TIOL viewers will be benefited more. We will continue with Mr. Vijay Kumar in our episode 2. Thank you for watching us.